What's going on, everyone? Hootmoney here with another video for you guys today. Today, we're going to be talking about Redbox Entertainment or RDBX stock because it is seeing a short squeeze currently and it has some very similar statistics to Aterian or Ater, which recently ran from about $2.31 all the way up to $7.26 on an absolutely incredible run. So we're seeing some similarities in RDBX, so we wanted to go over it in today's video. Anyways, my friends, I actually was trading RDBX on Hootmoney trade alerts. We got in at the bottom, literally at $2.10. You guys can see my entries and exits on the screen right now. If you guys wanted to join me on Hootmoney trade alerts, I post about tickers and plays that I am making that aren't always going to make it to my YouTube channel, because the YouTube channel, well, it's kind of hard to throw out those updates, you know, when I see the opportunity present itself. So that's what Hootmoney's trade alerts is for. It's that first link in the description down below. But with all that being said, let's jump right into today's video. All right, so looking at RDBX here on Market Cypher, it's showing an absolutely incredible start right here to its enormous rally, up 104% from its lows of about $1.98. I was actually able to snipe this thing around $2.10. I alerted Hootmoney trade alerts right away. By the time I actually ended up even tweeting about it, it was already about like 280 plus. So that just shows the power of Hootmoney trade alerts right there. But if we're looking at it right now, it's definitely showing some downside risk. Now we're going to move into the Fibonacci retracement because, well, that downside risk might not be coming right away. As you guys can see, there's still some room to go until the next fib level based off of the retracement from the previous high back on March 21st down to its low down here on April 11th. That would imply that the 161% fib level is at $4.71. So that's where I potentially see this explosive rally that we're seeing, at least see some selling pressure and slow down a little bit. And that 4-hour chart, especially with that VWAP pointing down right there, that could definitely show some additional pressure. Also, hourly chart is definitely showing that a red dot signal is occurred, showing that this thing is a bit overbought. So really at this point, you're playing the game, especially anytime you see candles like this, right? You're playing the game that it just keeps going before you have time to pull the trigger and get out. I would never say to just buy into something like this and just let it ride, because, well, if it breaks down, now you're bag holding. I'd say the best way to play something that is actually just running and running and running, you want to keep the runner going, is to have a stop loss, and then as it keeps moving up, you just move up that stop loss, move up that stop loss, move up that stop loss. That way you never end up becoming a bag holder, because your stop loss would hit, and you can define how much money you're actually willing to lose simply from that stop loss alone. That's why I really like stop losses, because it's a very simple way of risk management, because it simply defines how much money you are willing to lose. And when there's something super risky like this, that it's running and it's running really quickly, really fast, but it also has that risk of it coming down. Obviously the VWAP started pointing down back here, so you would have missed out on some gains, right? But if you had that stop loss in and you just kept raising it and raising it and raising it, you could have rode that wave up. And if it does come down, right, because it is overbought, then boom, your stop loss hits and you lock in that profit. So that's just one of the risk management strategies. We're also seeing these two dotted lines, these perforated lines. It's another form of a Wyckoff, guys. What we're seeing here is reaccumulation at its finest extent. Now, we could end up in distribution. A classic sign of distribution is when it dips below the support level first. So usually in accumulation, you'll see the big spring or the big dip occur after, right, that first move back down, right? So normal accumulation would look something more like this, right? And then it would start running. So the level I really want you guys to be watching right here is anywhere between 465 and this upper level right here of 486. If it does not bounce in this zone, again, between 365 and 486, there is the risk that it is in distribution. And especially if it gives up 365, that would mean that it would probably come right back down to 276. However, what we want to see out of this pattern is essentially that it comes down and bounces from this zone and then continues to make new highs. So just comparing it to Aterian or Ater, if you're just looking at Aterian's chart, yes, it does have an oversold green dot signal. However, there's a lot of close price action that is well above the current trading price, meaning that there's going to be additional selling pressure as Aterian does move up. This is something that RDBX does not really have because there's not really any sellers that are holding in this region unless they're from all the way back here, which at this point I think they're either out of their position or they're probably in it for the long term anyways. So I'm definitely not seeing the same selling pressure come into RDBX as there would be from Aterian. You can also see that Aterian, when it did sell off, it ended up hitting its 61.8% fib level, which is not a great sign. The most you really want to see something hit while it's in an uptrend is this upper fib level right here. When it gives up the upper fib level, it becomes a lot more dangerous and it could be a potential start of a downtrend. I'd like to quickly thank the sponsor of today's video, which is Moomoo, a licensed FINRA broker that does absolutely zero payment for order flow, plus they give away free level 2 data. As you guys can see the promotion on the screen right now, they're giving away up to $7,000 in free stock as long as you deposit $1 on their platform. You can only get that promotion using the links in the description or pinned comment section. But with all that being said, let's get right back into the video. All right, so this is where we're comparing the two plays because they're very similar in the fact that their price levels started from around the $2 area. Correct, got it, good. But they also have very similar short interest statistics. As you guys can see, Aterian has about 42.48% of its float being shorted, a 257% cost to borrow, and 100% utilization. If we're looking at RDBX, it's not on the threshold list, so Aterian is on the threshold list, but it also has about 43.8% short interest, 226% cost to borrow, and then 100% utilization. So there's a lot that is similar about these short squeeze statistics, but what is different here is if we're actually looking at the free floats of these companies, RDBX is a very microscopic float at 2.77 million shares compared to Aterian, which is almost about 10 times higher there at 26.27 million shares. Another thing is RDBX does not have any options being traded on it. Aterian has a ton of options being traded on it, including people that are hedging their short positions. With redbox, since there aren't any options, it's pretty much impossible to use call options to hedge your short positions on the stock. So if the market maker finds himself in a position where it's naked shorting redbox, right, in order to meet the demand of people buying it, well, market maker can't really hedge the short position. That's kind of bad news bears. So with Aterian, you can just buy a call option, and you essentially, as long as you remain negative delta, you are still in a short position. For example, right here, let's say May 20th, you're buying an out of the money Aterian call option to hedge your short position at $5 per share. So boom, you get the $7.50 call option. Your max loss is $2.50 per share. That's perfectly fine. You take 100 or negative 100 delta, and then you add in the positive delta that you get from the call. That would be, oh my God, that would be minus 0.69 delta or minus 69 delta. So as long as the short seller has a negative delta position, negative net delta position from the call and the shorted shares, they are hedged from infinite loss. And again, guys, on RDBX, it's impossible for a short seller to hedge from infinite losses because, well, there is no calls. The only way for them to hedge against infinite losses is, well, for them to cover their short position. So with all things considered, I'd say RDBX has a much better shot at seeing some significant upside than ATER, especially at this point in its life cycle. It has very high momentum. Both of them have very high momentum, but RDBX is in price discovery mode currently. Meanwhile, ATER has suffered a significant decline and is trying to reclaim those heights, which honestly is a lot harder task to do. At $4.13 where RDBX is trading right now, even if it got to Ater's high, which would be a lot easier for RDBX, that would still be about an 80% upside from the current price levels. And with all that being said, there are no options and there's less room for manipulations because, well, market makers have less tools to hedge their bets. So with all that being said, don't chase, don't FOMO, use risk management where appropriate. But RDBX is definitely one to be putting on your watch list, my friends. I hope you all enjoyed today's video. Drop a like on it if you guys did. Subscribe to the channel if you guys are new. Check out Moomoo if you want up to $7,000 in free stock as long as you deposit $1 on their platform. And if you want to check out Hootmoney trade alerts, we get on these plays such as RDBX very early on, way before I'm able to make content on it and post it on YouTube. So check that out using the first link in the description down below as well. Anyways, that's about it. I'll be seeing you guys next time.